Today was the single biggest day of earnings reports for companies in the S&P 500, and now more than half the firms in that index have said what they made or lost last quarter. Here to put the numbers in context is John Butters, Senior Earnings Analyst at FactSet. John, welcome back. Good to see you. Simple question. How are we doing?
Well, Tyler, relative to analyst expectations, it's been a very average quarter. We've had over half the companies report earnings at this point in time, and 74% of companies have beat the earnings expectations. Now, that might sound like a high number, but it's actually just a little bit higher than the average over the past 4 years, 73%. And on the revenue side, we've seen 54% of companies beat the sales estimates, and that's a little bit below the average of 58%. However, it's much better than the performance we've seen in recent quarters. In 3 of the past 4 quarters, more companies have missed revenue estimates than beat. So again, a little bit better performance on the revenue side than we've seen in recent quarters.
And let's look ahead, because everybody always looks to see what's the guidance that they hear from company executives. We heard yesterday from Caterpillar, weak guidance going forward. As you look at that, what can we expect for the third quarter, the current quarter, and fourth quarter?
Yeah, if we look at the guidance for the third quarter, right now 49 companies have issued EPS guidance. 39 of those companies have issued negative guidance, so that's a rate of 80%. And that's consistent with what we saw in the previous quarter. We saw a similar number back in Q1, but it's much higher than the long-term average of 62%. And we've seen a lot of negative guidance from companies in the technology sector, and that's one of the sectors we've seen significant cuts to estimates for Q3 at this point in time.
You know, John, if I am a long-term investor as opposed to a trader, what I care about most is not whether a company beats the Wall Street estimate or not on profit or revenue. What I care about is what is the absolute level of growth. So in terms of earnings, how fast are profits growing and how fast are revenues growing?
Well, in terms of earnings and revenue, we're having a fairly weak quarter. On the earnings side, the growth rate is 1.8%. And now that's an improvement over where we were coming into the earnings season at just an expectation of 0.8%. But if we finished at 1.8%, that would represent the third lowest growth we've seen in the past 4 years. And on the revenue side, we're seeing similar growth. That's around 1.2%. And that's a little bit better than we've seen in recent quarters. Over the last 3 or 4 quarters, revenue growth has been spotty. So again, on the earnings side, while we're seeing companies beat on the expectations, the earnings growth is relatively weak at just under 2%.
John, we did say we're at the halfway point, so there's still another half of companies to hear from. A lot of big retailers like Walmart have yet to report, big oil companies like Exxon. What can we expect to hear from this new wave of earnings?
Yeah, as you mentioned, so coming into the second half of the earnings season, we'll hear from a lot of companies in the energy sector and the utility sector. And then later on in the earnings season, we'll hear from the retailers, and they're such an important barometer for the health of the consumer. We'll certainly keep an eye on what their comments are going forward. The companies in those companies are part of the consumer discretionary sector. That sector is reporting growth of 4% right now. That's the third highest in the index. So again, we'll keep an eye on their performance to see if it moves that growth rate for the consumer discretionary sector.
You know, John, if you got profits growing at 2%, but prices of stocks growing at 20% so far this year, you got to wonder, don't you?
Right, and it could be a case for the markets looking ahead past this quarter to future quarters. As we mentioned, for the third quarter, although the growth rates come down, analysts are still looking for just under 6% growth in Q3, and that's expected to jump up to 11.5% in Q4. So it could be a case where really the market's already looking past Q2 and looking for better expectations for earnings through the second half of 2013 and into 2014.
John, thank you very much. John Butters with FactSet.